The reality is that most traders will lose trading meme coins. Yeah, you'll see people on social media talk about how they 10x'd their money overnight, but in reality, it's straight gambling. But did you know that you can actually make a profit from the risk that these meme coin gamblers are taking on? It's using a simple business model called liquidity as a service, and it's the same business model Mitch here used to generate over $2,000 in his first 48 hours of starting this business model and joining our community. And it's also the same way this guy here made over $2,400 on his 17K investment. And you're probably wondering, what is this business model? So let me explain. So if you're not already familiar with what a decentralized exchange is, it's basically a place where traders will go to swap one cryptocurrency for another. There's exchanges like Uniswap, Orca, PancakeSwap, and more. When a trader wants to hop in these crazy meme coins like Chill Guy or other coins, they're going to need Solana a lot of the time. And how are they going to get this Solana? Well, using decentralized exchanges like Orca. As you know, people aren't buying these meme coins with typical Bitcoin, Ethereum, or their USDC. They're using Solana, especially recently. So if a trader wants to swap, let's just say $580 USDC for some Solana, they're going to make a trade. And likely they'll be using a decentralized exchange to swap these cryptocurrencies. And look, they're going to have to pay a fee, a liquidity provider fee. Now, these fees change all the time. They go up and down. But what's really cool is that this fee gets paid out to the people just like me who are providing liquidity for this exchange to take place in the first place. So by providing your liquidity to these decentralized exchanges, you can actually make money when these gamblers are swapping their USDC for their Solana since they want to hop in these meme coins. And think about it. There's so many trades going on at once at the blockchain. So there's so much money in fees constantly being paid out to liquidity providers just like me. And you can do this with other assets, not only Solana. You can do it for pools like Ethereum to Aave and other assets. Now you're probably wondering, how can I even find these liquidity providing opportunities in the first place? Well, if you go over to DeFi Llama, go to the yield section and then click on pools, you can see a bunch of liquidity pools and you can see some information about them. You can see basic info like their TVL, APY, and more. But the thing is, on DeFi Llama and a lot of these websites, you can't do advanced due diligence and research because a lot of the data that you need is not there. And on these websites, you can't even simulate your potential returns to see what type of returns you could be getting if you enter the liquidity pool. And that's where the software Metrix.finance comes into play. It's the best software for finding liquidity pool opportunities and simulating your returns. And we built this software because we couldn't find any other tools that could provide us with good due diligence and simulation features. So here on Metrix Finance, you can go to the Discover section and select your exchanges and networks you want to look on. In this case, we can go to select all exchanges and select all networks. Now, there is a free and paid version of the software, but some of the features in today's video will be available on the free version. So now we can set up some filters because it says there's 1,926 pools to sort through. That is a lot. So obviously we're looking for some pools that would give us solid APR, hopefully. So let's look at pools that have higher than 18% APR. And I'm going to type in lower than 150% APR. The reason I'm not looking for pools with like 500% APR is those typically aren't too consistent in the long term. And I don't know about you, but my goal is to make my passive income as consistent and as long term as possible. And then for TVL, I'm going to look for pools that have over $2.5 million in TVL. And now we're down to 165 pools in the top right, as you can see. So obviously it's still a lot of pools to go through, but it's much better than the almost 2,000 pools from before. Right off the bat, I'm going to ignore the meme coin positions like wrapped ETH to Pepe and other meme coin positions that we might see like wrapped ETH to Turbo. I personally would rather take on exposure to the liquidity pools that include Solana, or the asset that is pretty blue chip that users are using to actually buy the meme coins instead of me taking on exposure to the meme coins myself. So here we see wrapped ETH to USDC with a TVL of 471 million. We can go ahead and click the simulate button to simulate it in a new tab, and let's check it out. Now Now we can set our sample deposit amount to $10,000. Here we go. And we can scroll down to find our range. Now here at Builder Wealth, we have other videos going over how to find our range, but that is not what today's video is about. I'm showing you how you can find these opportunities. So you would go ahead and find your range. Now, say I was going with a decently wide one, something like 2789 to 4399. We'd be getting an almost 30% APR according to this. So with a $10,000 deposit amount, that could be almost $3,000 a year. Now, of course, there are risks to this investing, just like any investing. Some of these risks include divergence loss, but we can try to do our best to mitigate these risks. Now, I also like to zoom out on the calculation range, which is an amazing feature of Metrix Pro, so you can see how this pool has performed over the past 100 days, 120 days, or whatever range you're looking for. And then I'll zoom back in to try to get the most accurate simulation. So I'm going to go a bit wider on the range. Using the past 21 days of data, we'd be looking at about 26% yearly APR, which is solid. So with a $10,000 investment, that would be like 2.5K yearly according to this. And keep in mind, this is a blue chip asset, wrapped Ethereum, paired with a stable coin. So that's a solid return. Scrolling down, you can check out the volume history. I like making sure it's consistent enough and not having super low days. And here you can see the correlation. These assets are not correlated since it's a stable coin paired with an actual blue chip asset. And yeah, the next steps would be say, hey, do I want to take on exposure to wrapped Ethereum and USDC? If so, this opportunity pool could be solid. We can save it to our portfolio for later to do some more research. And I'll show you an example with this USDC to Solana pool so you know what I'm talking about. So if you want to be providing liquidity for when people are swapping their USDC for Solana, you can go here, go to pool, then just search for USDC Solana. Here we go. We can see one, USDC to Solana, the 0.04% fee tier, doing about 60% APR. We can simulate this in a new tab and open it up here. So now we can start our research. We can zoom out on our calculation range, zoom back in, and we can change our range. And I'm going to have it decently wide again. And with this range, based on the past 37 days of data, it's saying we'd be getting about a 56% APR. That's solid. And with a $10,000 deposit amount, it's saying we could be earning about $5.5 thousand per year in fees. And of course, you'd have to do your due diligence. Say to yourself, do I really want to take on exposure to SOL and USDC? Do research onto the assets that are in question. And if so, you can save it to your portfolio and enter the liquidity pool. So here you can see I have $700 in the SOL to USDC pool that I was just showing. And based on the past 24 hours of data, I'm expected to get 0.238% per day in estimated yield. And right now my balance is $713.12 in fees are waiting for me to collect. If you've learned something so far, make sure to subscribe, hit the bell so you don't miss an upload. And if you're looking to learn the ins and outs of DeFi so you can stop gambling on these meme coins, we have a great resource in the description down below. Click the link and check out the video. But anyways, we could go back here and sort through more possibilities. So I'll take out the USDC and SOL, and then we can scroll through and see other pools. So we could also check out positions like this, wrapped ETH to render, saying it's doing over 100% APR. We could simulate it in a new tab, check it out, and look at it further. Scrolling down, I'm gonna select my range again, just like last time. I'm gonna make this pretty broad because again, I want to have my investments be pretty passive. I don't want to be constantly having to check my portfolio or rebalancing my position, etc. And with this range here, based on the past 33 days of data, it's saying we'd be getting about a 96% yearly APR. And with a $10,000 deposit amount, that's almost $30 a day in fees. That's a lot. Keep in mind, this is $10,000. So you could put in much more money than this into a pool like this. So the next steps would be do your due diligence and research on these assets. Look at Render. Look at what it is, what it stands for. Go on the website for Render, etc. and say, do I actually want to take on exposure to Render as well as wrapped Ethereum? Do due diligence for both these assets. And if the answer is yes, you can save it to your portfolio, head on over to the build section at the top and start building out your portfolio. Another cool part about this software is that when you're in a liquidity pool, you can track your performance. You can paste in a wallet address, see current liquidity, see the earnings you've earned and your profit and loss, as well as your ROI, APR, etc. If you've enjoyed today's video, make sure to subscribe, hit the like button and click the bell so you don't miss an upload. And also check out a DeFi Excel community in the description down below. Click the link.